It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Well, hey there, it's Tyrone Jackson, the wealthy investor, and welcome back to another episode of Trading Stocks Made Easy, the podcast. Today's show, I'm going to talk to you about understanding rates of returns. Now, this is supremely important if you're a covered call writer. So let's start from Investing 101, shall we? You see, when a millionaire puts $1 million into an investment, the only thing that he or she is really concerned with is what is my rate of return, right? So if I'm going to put up money, I want to make sure that I'm going to make something back. So if I put $1 million into a business, a pizza parlor, a doctor's office, what is my rate of return going to be annually on that $1 million? Well, if I dump the $1 million into a dental practice, for example, and that practice starts to earn $50,000 a month, then I am getting 5% on my money every single month. It would take about 24 months for me to get my initial $1 million back, and then everything else would be pure profit. It would be the same thing if I put $1 million into a pizza parlor. What is my rate of return on the cash that I actually put up? Well, we do the same thing as wealthy investors in the stock market. Instead of opening a business, guess what? We sell covered calls and we put cash in our pocket month after month after month after month with a predictable rate of return. Now, the reason I love selling call options on stocks is because every week, every 15 days, or every month, I already know how much money I'm going to earn. So if I put $100,000 into a brokerage account, trading using the wealthy investor approach, the only question I have to ask is what is my rate of return? So if I could get 5% on $100,000 every single month, I'd be generating $5,000 a month in spendable cash. If I can get a 2.5% return on my $100,000, I am making $2,500 guaranteed from the stock market every single month. And that's why in the wealthy investor approach, I'm always teaching you to keep things simple. Don't make your approach to the stock market complicated. Don't try to figure out the market and try to time when a stock is going down or up. Just take the predictable money. Now, it's really funny because I've been teaching now for almost 12 years at my live events and then certainly online. And sometimes good enough just isn't good enough for some of my students. When they find that they can get a predictable rate of return, guess what they want? They want a higher rate of return. Now, I talk a lot in my program about allocation and how to manage risk. Because if I'm going to teach you how to get a predictable rate of return, there are certain stocks that allow for that return to be predictable, but that are lower risk. And there are other stocks that are higher risk. Now, what defines a higher risk stock? Well, a higher risk stock is usually a stock that does not pay a dividend. Now, what is a dividend? A dividend is your share of the company's profits paid out on a quarterly basis. Now, if a company's actually growing their revenue, they don't have enough capital left over at the end of the quarter to issue a dividend to shareholders. If a company is more mature, let's say 5, 10, 15 years in business, they're making billions of dollars and then they can pay a dividend on a quarterly basis back to the shareholders. Okay? So when we're trading a stock and we're selling options to other people, why are we selling those options? To get a predictable rate of return. That's how the game goes. If I'm trading a risky stock, I might find call premiums that are out of the money that are higher than the stock that pays a dividend. So I don't mind putting some of my money in a stock that doesn't pay a dividend to get a higher rate of return. But what I also get with that stock that does not pay a dividend is more risk. Why? That company is in the process of growing their revenue, right? So I'm not going to get that dividend. I'm not going to get lower risk, but that stock is going to be a lot more volatile and a lot more susceptible to good or bad news. So news is part of what drives volatility. So when a stock has good news, it can run up really quickly. We saw that happen in the stock market a couple of weeks ago with a company whose ticker begins with the letter T, but I won't say the name. And the market went, oh my God, this company's the new star of Wall Street. It's not. It just had a great quarterly earnings. And I expect that stock to drop back down and I would never recommend it to my students. It starts with T. Have I teased you enough on that? Anyway, I like stocks that have predictable rates of return. I like stocks that pay a dividend. And every once in a while, I'll find myself trading a few stocks that don't pay a dividend because I'll get more volatility, which means a higher rate of return. And I'm willing to accept that a higher rate of return and the volatility that's in the stock. So why is it that some of my students say, well, if it's all about getting a high predictable rate of return, I will only trade stocks that don't pay a dividend? When one of my students tells me that, that means that they're now in the land of greed. The worst thing that can happen for you as a trader is that you get stuck in the land of greed. Greed is the first step towards shutting down your predictable profits. Because when you have 80% of your portfolio in stocks that are high volatility, those are the ones that drop the fastest. So I'm always on this show talking to you about my students who've done very well. They tend to be the most disciplined, but you rarely hear me talk about people who have done poorly. So I'll just give you that answer today. Traders who lose money break discipline. You see, when you're a trader, particularly again as a covered call writer, you're in the business of getting predictable results over and over and over again, because that's how you turn the stock market into a cash flow machine, is by getting predictable rates. When you seek to get higher rates because your ego gets involved with your trading, guess what? You are on a slippery slope down to the basement. And I can always tell when people are about to lose a lot of money when they tell me what they're trading with the most frequency. Now, here's what happens. Your first year of trading, there's a pattern to all this, right? Your first year of trading, particularly if you're using the wealthy investor approach, do you know what you're going to do? You're just going to go crazy. And then your unconscious goal becomes to make as much money as you can as quickly as you can, because you think you've discovered something that I, the teacher, does not know, right? Okay. And I watch this pattern happen to new students constantly. And then in your first year, once you lose about $10,000 or more, you go, you know what? I really need to slow down. You develop an interest in self-control and discipline. And then after your first year of trading, that's when your profits start to get predictable and bigger and bigger and bigger and bigger, because you realize that you are trading risky stocks and the market has no problem taking your money when a stock drops $25 and you go, oh, how could this possibly happen? How could it happen? Because you had too much risk on in your portfolio. So getting a predictable rate of return is what we're all about. Now, some people will go, well, I don't want a 2.5% rate of return on the money that I have in my trading account. No? Well, if you do that over 10 months, think about it. That's 25% every 10 months in the increase of the value of your portfolio. Now, this 25% or 2.5% per month is really important. You see, when you put your money in a mutual fund, right, is your money at risk? Yes, but you're turning it over to someone who you don't know, a mutual fund manager, and you're letting them produce a rate of return that you're supposed to, according to the TV commercials, be happy with. But remember, if you're in a mutual fund and you have a 2.5% annual return, not monthly, but annual, that there are fees that come out of that, because the person who's managing your money needs to get paid. So they say, out of the 2.5% that I got you on an annual basis, I have to take a little bit out for a management fee. And then most mutual funds have something called a load, which means when you deposit money into the mutual fund, they take a little fee off of that. And then if you ever want to sell out of the mutual fund, they take a little bit of a fee off of that. So all these fees, these loads, as well as these management fees, really leave you with what? Less than a 2.5% annual rate of return that you get to keep. And this is why I'm always telling you, your job is to learn how to manage your money in the stock market, learn how to be a covered call writer, get predictable rates of return, take some of those profits and invest them in long-term stocks that can make you wealthy and grow your monthly residual income so that if you ever lost your job or anything bad ever happened to you, guess what? You have a built-in revenue stream into your lifestyle. So, for those of you who are trading on your own, ask yourself, how much money are you making on a monthly basis? What is your rate of return annually? And are you satisfied? So these days, I've been kind of after some of these YouTubers, all these people on YouTube saying they make so much money. Half of them don't even trade stocks. They're just recycling old information. And it makes me a little, pissed off, just a little bit. Why? Because I actually do the trades and I monitor the market so that I can guide me and my students in the right direction every single month. And I can tell when someone's using language and they don't have money in a trade. It's a dead giveaway. But what do I want for you? I want you to think about residual income for yourself, which stocks are wealth building stocks, which stocks you're willing to hold on to for a 2 to 5 year period since that cycle is proven. And how much money do you want to have coming in on a monthly basis, which then equates to an annual basis and that secondary revenue stream? That's really what you need to think about right now. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And welcome back. Hey, if you feel this podcast has helped change your life or influence you in a positive way, share it with a friend on Facebook, Instagram, Twitter, or any social media that you have access to. It's a great way to help other people. Now back to the topic at hand. The second thing that I wanted to talk to you about on today's show is this notion of lifestyle. Okay? So I'm going to do some quick math. Let's say you were a stock market trader and you started off with $100,000. I know not everybody can start off with $100,000, but in this illustration, it'll make the exercise nice and easy. Okay? So if we start off with $100,000 and we can generate a 5% return on a monthly basis, we'd be earning $5,000 a month predictably, which is not bad because over a 10-month period, that's $50,000 that we get to keep with no management fees. Well, if you're earning $50,000 every 10 months, you now have a secondary revenue stream. So if you lost your job or your spouse or partner lost their job, you still have that $5,000 coming in every single month. And how long does it take you to trade in the style that I teach? Maybe 7 minutes a month. 10 minutes a month, because we're not like day traders in the market every day. You see, we're in this game for predictable income. So that $5,000 can support your lifestyle. When I first got started trading in the stock market, I came from a working class family, as you know, right? Raised by a single mother where there was no financial education. But I understood the idea of having a residual income stream. So if I knew I could get to the point where I could just have an extra $5,000 per month coming in, what could I do with that $5,000? Well, if I wasn't reinvesting it all back in the stock market, I would have an incredible lifestyle. Why? Maybe the stock market was making my car payment. Maybe it was paying my cable bills. It means I would have a killer vacation once every 6 months. You see, my investments were supporting my lifestyle. And that's what I really want you to get here. That if you learn the system that I teach, then guess what? You will now have income that supports your lifestyle. When I first got interested in wealth building, the first thing I turned to was real estate, right? So, when I was growing up, there were all these infomercials on TV and they talked about how much money you can make with real estate, renting out houses. And the whole goal of renting out these houses and buying this real estate so that ultimately you would have cash flow. So it's no surprise that I started out buying real estate. The only problem is I really wasn't good at it. Not the buying part, but I didn't know anything about like roofs and septic systems and plumbing. And it all took so much time. And then when I rented the place out, the tenants didn't always pay the rent on time. So there goes my positive cash flow. What attracted me to the stock market, and I said to myself, I'm going to learn as much as I can here, was what? The fact that I didn't have any tenants. I was still generating residual income, which was the point of the whole real estate exercise, with no tenants. And then when the internet came in, I could trade from anywhere in the world, even on vacation. I was always making money, and I fell in love. And I love that aspect of the stock market where you can pull out predictable income. Now, let's say on my $100,000, I was only getting a 2.5% monthly rate of return. Still not bad. It's $2,500 coming in every single month, and I'd be holding certain stocks for the long term. Well, what could I do with $2,500? Well, I could pay my cable bill, although it'd be a heck of a cable bill for $2,500, don't you think? I'd have all the premium channels. Or I could make a car payment. Or maybe that $2,500 can contribute to my rent or mortgage. You see, the goal is to take this money that's coming in every single month and let it support your lifestyle in the long term and in the short term. You see, when you start to look at the stock market as a form of residual income and you get your profits predictable, you have financial freedom. Most people in our country don't, because most people never seek a financial education. In fact, in our school system, we're never taught to seek a financial education. We are taught to trade time for dollars, to become workers. Yes, even if you have a PhD, you're going to use that PhD or that master's degree to go to work for somebody else. So just by listening to this podcast, you are miles ahead of the average person. So my question to you is, what would you like to change or enhance in your lifestyle? What would you like to use the stock market for that would make your life in financial terms easier? I love some of the things that I've seen people do with this recurring residual income and this predictable rate of return. And here are the top things that I see people do. Pay off their college student loans. Imagine if there was a way to trade stocks and you were taking that money that was coming in whole or in part, and it was paying off your student loans. See, then you wouldn't have to pay the minimums. You could accelerate the payoff of the student loans. Although this is not as glamorous, I'm just telling you, I see a lot of people pay their child support, right? So if you're divorced and you have to pay child support, why not let your investment income actually do that for you? And number 3, which is the one that I really like, I see people help other people. As our parents age, they need money. Doesn't it make sense that you can support your aging parents and or their needs through investment income? See, then it's not a burden as to where you're going to get money from, because when you have that financial education and you start getting results, you have freedom. This is the power of getting the financial education, opening up your consciousness, is that you want to be able to give yourself streams of income, which then gives you choices. Now, if you get just 10% of what I've introduced you here today, you are on solid ground to change your life forever. But I want to talk to you about one other thing. You see, you can only pass on the education that you have to your family and to your grandkids, to the next generation. So therefore, if you never get the knowledge of how to trade stocks, you're stuck in working class mode. You will never have wealth information to pass on to your kids and your grandkids. The greatest gift you can give the next generation coming behind you and people in your family is a financial education. Because when you know better, you do better, says Maya Angelou. So as you join me each week listening to the Trading Stocks Made Easy podcast, I hope you feel good. I hope you see that there is a world of possibilities for you if you embrace some of the concepts that are talked about on this show. And today's concept is what? Rate of return. Know your rate of return. Make your profits predictable when it comes from the stock market, and you will not only change your life, but the life of the people you know, love, and care about, as well as future generations. Hey, this is Tyrone Jackson, the Wealthy Investor, saying I'll see you right here, back on the next Trading Stocks Made Easy podcast.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't know which stocks to choose for trading in today's market? No problem. Just follow Tyrone Jackson's hot stock picks inside WITradeschool.com. At WITradeschool.com, you can also follow Tyrone's weekly stock market tutorials and investing advice. Plus, each week you can submit your trading and investing questions directly to our staff, and Tyrone will answer them as part of our weekly video Q&A sessions. Begin your membership right now and you'll get instant access to WITradeschool.com's video library. That means you'll get to know all of Tyrone's major and minor trading strategies, including covered call writing and volatility trading for fast, sexy profits. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. In addition to a successful podcast, Tyrone's editorial content has been featured on CBSMoneyWatch.com, NASDAQ.com, and YahooFinance.com. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.